Hello, this is Brian Shannon from Alpha Trends Blogspot. Today is Monday, September 17th, 2007. The market's closed, and the S&P 500 finished with a loss of 69 cents as measured by the Spiders, SPY, and that is approximately a 0.5% loss today. And you can see the market continues to struggle with this 50-day moving average. I'll point out once again that more often than not, what tends to happen is the market will resolve itself in the direction of the 50-day moving average. In this case, the direction of the 50-day moving average is lower. I also wanted to point out this level that I haven't mentioned in a while, but if you take the highs from back here in July to the most recent lows just on about August 16th or so, and do a Fibonacci, you'll see that the market has been also struggling with the 61.8% retracement level here at about 149. More importantly, though, I think, is the 150 level. And this is what makes tomorrow's Fed news so interesting on a technical basis, is that whoever takes control of the market at this point, I think, really has the ability to reveal the true trend and nature of this market. And if you're bullish on the market and if it starts heading lower, be quick to react. Not necessarily right away. By quick, I mean over the next couple days, because a lot of times you get that initial knee-jerk movement off of the Fed Reserve, what they say, their policy, and that sort of thing. Then we have some jockeying for the next day or two after that, and then the true trend reveals itself. So just be very careful in here. I've been stressing that you really need to be careful for the last 7 or 8 weeks or so, and this market has the potential to find that resistance up near 150. Continue to find resistance up near that 150. That could frustrate the buyers, and they could just kind of give up on this market. So it remains in kind of no man's land, which to me means trading opportunities on short-term basis is where you want to be focused right now until we have a better idea of where this market really could be going. So in other words, nothing's really changed, but there's a lot of importance based on this Federal Reserve meeting. And I think that's because the potential outcome here could really send this market in either direction. If it's to get back above and hold above 150 for a day or two, then I think you're going to find that this market could get squeezed pretty hard to the upside. If it breaks down, though, and in particular takes out this low right here, we have this pattern of higher lows and then the resistance near the declining 50-day moving average, then things could fall apart and look pretty ugly, and then we might have to start looking at this weekly time frame for potential support levels. Again, though, there's nothing indicating a breakout or a breakdown yet, so just continue to keep your powder dry, be on the sidelines with cash for when that trend does reveal itself, and focus on some of the excellent day trading opportunities. On Friday, I had mentioned that it looked like support would be found near 147.60. I think today's low was 147.63. So it was definitely found in that level that I identified on Friday, and that's the area where we had previous support back in here, and also the location of the rising 5-day moving average, which you can see is holding as support here throughout the day. So looking at a 2-minute, or let's look at the 1-minute time frame, you can see it was just a choppy session. Market tried to rally late in the day, it failed, it came back down and closed pretty much unchanged based on the average transaction price. The average transaction price, or the VWAP, volume weighted average price, was about 148.19, and you can see that the sellers had a slight control over the intraday battle, but on a daily, day-over-day basis, it did again lose a 0.5%. Let's take a look at the semiconductors. This is the group that's been in the most trouble. I've already got these Fibonacci lines drawn in here from earlier, so let's just take a look at that. You can see the market did retrace up to that 61.8% retracement level, and now it's heading lower once again. It's possible that we're going to find a symmetrical move, meaning the size of this move could have begun right there. So that if that's the case, then that 39 level would give us about 6 points of downside, down towards about $33 a share. That's a little bit longer term than what I'm used to looking at. I did express on Friday that we needed to be, Thursday and Friday of last week, that 37.40 would be the level to keep an eye on. That level was taken out on Friday. The market remains below that level, so we've got a market that is still guilty till proven innocent with this declining 5-day moving average here on the intermediate term. And it's still not showing really any signs of bouncing in here. Maybe a little bit towards the end of the day. We've had the short-term moving average cross up through the intermediate term. That typically occurs when we've got some stability in the market or some distribution. So too early to read into that as strength. In order for any type of upside trade to carry any weight here, I think you need to see this market at least back above 37.40. Hopefully by that time the 5-day moving average will have come down and flattened out as well. So as far as the semiconductors go, continue to look at this market as guilty till proven innocent. It's got a lot to prove in here, and it's still looking like it's probably heading down for at least a test of these lows, maybe that 200-day moving average. But again, just continue to be careful in here, particularly with a big potential fundamental catalyst tomorrow, or and not necessarily even a fundamental catalyst, but a widely watched market event. I don't really think the Fed has enough power to really move the markets for very long. It's just going to delay the inevitable. We've got earnings coming up as well, so I don't have an opinion, but looking at the IWM, again, we've got this declining 50-day moving average. That 50-day moving average is below the 200-day moving average, and this market just cannot get out of its own way. It can't get back above the important level of resistance right now is at about $78.20. The longer it remains under there, now again we've got the 10-day moving average below the 20-day moving average, the 20 below the 50, and they're all declining. The worse the chances of a recovery become. It doesn't mean it can't, but it's just looking like if you're a buyer, you're starting to get frustrated with this action and perhaps lightening up positions, which puts the market in an overall more vulnerable position, easier for the sellers to come in and really smash the market and take control. Right now, we've got a little bit of support, it looks like, setting up near about $77.20 a share. So I think getting back below that level, and then the 76.75 lows from Friday, taking out those two levels is going to be pretty damaging, I think, to this market, because we've got these lower highs, but we have what looks like a higher low. So breaking either past $78 a share or really below, let's just say $76.75, I think that's going to continue to push the market in either direction. I would say odds favor further downside based on the direction of all these moving averages in the market. The fact that the market can't get back, hasn't shown the ability to rally back above there. But that 78 level will be very important here over the next few sessions. So just more cautiousness until we have an answer from the market itself. Not necessarily from the Fed, but from the market. The answer, don't look and try and force your opinion on the market based on what the Fed does or doesn't do. There'll be enough other people doing that with billions of dollars. Your $10,000 or your 10,000 shares aren't going to make a difference at the end of the day. The Qs, the NASDAQ 100, continue to be the most bullish group in here. You can see that it closed below the 10-day moving average, no big deal, but continues to hold above this 50-day moving average. That 50-day moving average is rising. And on Friday, I had pointed out the 49.40 level. That's going to be the more important level on the short-term time frame. Getting above there and holding above there. Not just a quick rally based on what the Fed says and it holds up there for 10 minutes and then comes right back down. But getting above and holding above that level, having this level prove itself as support would be a very bullish for the NASDAQ 100. I'm surprised this NASDAQ holds up as well as it does with the weakness in the semiconductors. Maybe though it's tracing out this little cup and handle in here. But the 49.40 level is the important level of support for now, and below that 48.60 is going to be our support. I think that you could take a Fibonacci off this most recent little move in here. You can see that 48.60 is 50% of it. So maybe even 48.40, breaking below 48.40 might be what it takes to really get the sellers back in control here. But most importantly, I think, is this what's been resistance at 49.40. So keep an eye on that. And tomorrow, you got to just go real slow here. Again, unless you're a very disciplined trader and very quick to admit your losses, and actually you're going to have to be quick to take profits, generally speaking, too. It's really a trader's environment. Other than that, if that's not you, just take the day off or just sit there and watch out of curiosity and learn. But it's going to be a difficult day. There's a lot of macro forces at what are turning out to be very important levels for the market on a technical basis. So just go slow, preserve your capital for when the true trend reveals itself, and things might be a little bit easier from a trading standpoint.